All right, going along NASDAQ here. This is a paper trade that I took today. Today was CPI at 8:30, so I don't know, I just wanted a paper trade. And I also wanted to trade minis, just to build some confidence, get some good practice. So the whole idea of this trade was obviously at CPI at 8:30. I was bearish for the most part. Everything on the higher time frame was speaking bearish to me. And we had a set of relative equal lows at 24,892 that looked too clean, and I figured that price at some point would want to disrupt that. But at 8:30 we had this massive wick to the upside, and to me, whenever I see a massive wick, I'm usually suspect of it, especially after something like a CPI. And to me, it screamed that the average retail trader is looking at that massive wick as, okay, we did damage to the upside, and now we're going to take out sell side. So that's where I label it there. Yeah, shorts are convinced CPI has done the damage to buy side and have placed their buy stops at that wick high. So they're going short, looking for lower prices. And to me, that seemed like an easy grab. That seemed like price would want to attack that wick high before moving to the downside. So we get that wick up at 8:30, and I mark out a fair value gap that formed after 8:30, and price starts to close above it, and I'm treating that fair value gap as an inversion fair value gap and targeting that wick high as a partial, and ultimately I had a midnight opening price as best case scenario. But my main priority was my main focus was that CPI high. I think that price was gonna attack that. It was just too easy of a bait, and so again, I'm trading minis. I had entered one contract, and then we have a fair value gap that I entered on a very shallow down close candle. I entered a second contract. This is a hypothetical 100K demo account, so eventually risking less than 1% on this trade. And there we get that run up at 9:30, take out that CPI high. And here I'm just trailing my stop up. I'm not getting too aggressive because I want to give room for the trade to breathe. But if if price moves against my stop, that's okay. We hit our partial target, which was really the focus of this trade. What's the matter? You see me label out that wick, the mid-level. That's my last line in the sand for price to move against me. And then eventually you see me get a little bit more aggressive. I really like this trade. I like my thought process for it. I like my handling of my risk and my stop. Taking out roughly 0.5% of the remaining equity on that trade, which I'm happy about. And yeah, most of this trade is captured, and that's all you can ask for. So again, a demo trade, but it's good practice. Good practice to do this from time to time, especially on a day like CPI. And you see me get stopped out, and that's all she wrote.